Alright, so without wasting any time, let's move to today's topic. So today's topic is how to find weekly bias. Now, when we talk about weekly bias, we are stepping into the high time frames. And by high time frames, I mean two specific ones, the weekly time frame and the daily time frame. These two are the foundation. We use them to build a clear, confident, directional bias for the upcoming trading week. Once that bias is locked in, all our lower time frame entries, London, New York, Asian sessions, will align with much more clarity and precision. Okay, so to identify the weekly bias, the first thing you do is find the most recent break of structure on the weekly time frame. So this means look at the weekly chart, identify the last major high or low that was clearly broken. Was it a bullish break or a bearish break? If it was a bullish break, bias becomes bullish. If it was a bearish break, bias becomes bearish. This gives us macro direction. So why is this important? Because the structure break is the clearest evidence of strength from one side of the market, either buyers or sellers, and sets the tone for the entire upcoming week. It let us know that who is currently dominant in the market, who are more powerful, buyers or sellers. Okay, so we don't use a regular candlestick chart. Instead, we will use a line chart. Why? Because it filters out the noise and gives us a clean view of structure. Just the closes, no wicks, no distraction. Now, on the weekly chart, line chart, look for the most recent structure break. The direction of that structure break, whether it's a break of high or low, is what defines your weekly bias. If the high is broken, weekly bias is bullish if it's broken upside. If the low is broken, weekly bias is bearish. In this process, you will automatically mark a new high or low and potentially a strong low or strong high, which we will cover in the future sessions. So, so this single break can define the direction for the next 3 4 weeks or even up to 1 2 months, because high time frames breaks are powerful. They show commitment for big plays. So when we see our weekly break in the line chart, as soon as the market pulls back, market will start moving in the same direction. In this case, the high we have, which is week high, will be our next target. So from this point to this point, until this high breaks, we will see buy trades. So in chart, once you have spotted your weekly structure break on the line chart, the next move is simple. Wait for the pullback to complete. Once it does, expect the market to continue in the direction of the break. Until the week high is taken out, we will follow trend and look for buy setups only. Trading with a trend using the momentum from high time frames, it's your most confident and high probability setups. And yep, the same logic flips if the break was bearish. You will follow the bearish trend until the week low is taken out. Alright, so back to the charts. So in this case, our bias will remain bullish, but it is possible that it will take us 4 months or even 1 month. I mean, from 1 month to 4 months. It is possible that it will take us so much time to reach our target. From this low to this high, our entire 1 month can be in one direction. We can open multiple trades in one direction in 1 month. So what this means for you is you don't need to guess every day. You can align all your trades in one direction for weeks or even months. For example, if the bias is bullish, you look for a buy opportunity on low time frame. You may enter multiple sniper entries over the month, all in the same direction. Result: more confidence, less confusion, and much higher win rate. And yep, this is how professional traders build consistency. They find a high time frame bias and ride that wave with a precision increase on the low time frames. Because when we get the idea of weekly bias, we can open the swing trades in that case and hold them till their actual target. So to find a weekly bias, in short, the first step is to find the most recent structure break in the weekly time frame through line chart. You don't have to use a candlestick chart. You can use line chart. The next step is to find the strong low and strong highs in the daily time frame. And the next step is to find the most recent strong high or strong low. Find the most recent strong high or strong low, and we will use these in the daily time frame. We will open the daily time frame and we will see where our most recent strong high or strong low is. If your daily time frame is not clear, you can go to like 4 hour time frame and you can identify your strong highs and strong lows. So now the question is, can we use both line chart and candlestick chart? Yes, you can use both line chart and candlestick chart depending on what you are trying to identify. Let me break it down for you. Line chart is equal to best for identifying clear structure breaks on higher time frames, especially weekly. And line chart only shows candle closes, no wicks. So it gives you a clearer view of market structure without any noise. And it's also great for spotting directional bias. You can simply use line chart to identify most recent breakup structure and overall weekly direction. And now when to use candlestick chart. Candlestick chart is like use it to identify strong highs, strong lows, or key price action details. Candlestick charts includes wicks, so they give you more information about liquidity, rejection, and potential entry zone. So you can use candlestick chart to mark exact highs and lows, so, or you can spot POIs, your point of interest, and you can plan entries and exit more precisely using candlestick chart. So focus on these two lines. Structure is equal to line chart and execution and entries is equal to candlestick chart. This way you get the best of both worlds, clarity and precision. So let's look at some examples in real market. First, let's look at this example. Find most recent break in weekly time frame. So here we have a weekly time frame open, and here we have a line chart open. Now, if we look here, we can see a line chart like this. Let's look at this example. This is how market is moving according to the line chart. Let's go to the previous slide, and what happened here is that there was a weekly low break Before this, we had a weekly high break. The market dropped. There was a pullback. As soon as the market started going up, our buyers were bullish. Let's look at the buyers game. Until we don't have this high break, it took the market almost 14 days to break, meaning 2 weeks. In these 2 weeks, the market moved in one direction. The market stopped here. We can say that the market moved in one direction for 21 days, like 3 weeks. So in this case, if you catch the right trade from here, you can hold the weekly target. After this, you can see that there was a break here. Even here, there was a break, but the market failed to follow through. And then the market gave us a break here. Now after this break, when we have a weekly break in the weekly time frame in the line chart, now our bias is bearish. After that, you will see a slight pullback and the market starts moving bearish. As soon as this level breaks, you can take multiple clean sell entries. So there was a slight pullback and then market dropped again. If you look at this entire drop, the market has been moving in the same direction for nearly 21 days. So in this phase, as long as the trend holds, you will be seeing only and only sell entries. Here again, low break, again structure break in line chart. Now our bias will be sell again. Here market pulled back. Of course, we can see buy trades from here as well. But once the pullback ended and the market dropped again, it moved in one clean direction for 4 straight weeks. That's 28 days of bearish momentum. 4 weekly candles, all bearish. In this case, if you catch the right trade, you can hold it as a swing trade for up to 28 days or even longer. Once you have confirmed your weekly bias and the market starts trending, you can ride that trend until the next structure break. That means your trade could be held confidently for 1 week, 2 weeks, maybe even 4 weeks, depending on the momentum and structure. This is the power of trading with the weekly bias. You are not just catching entries, you are riding the direction of the market with confidence and precision. If we look again, there is a slow break in the weekly time frame on the line chart. After this, our bias was again on the sell side. When the pullback happened, the market moved in one direction for almost 35 days. And if you flip over to your candlestick chart, you will see the exact same story playing out visually. This time, the drop was extended. The market moved in one direction for nearly 35 days. That's 5 full weeks of continuous downside movement. Well, if the market goes up from here, you can, of course, you can take a buy trade. It's not about sitting idle and waiting endlessly for the market to drop. We don't predict, we react, we wait for confirmation. Well, we will go much deeper into how to identify these confirmations, when to sell, when to buy, and when to sit out. All of these will be covered in the upcoming session. So overall 14 days of pullback and 35 days of expansion. Now, if you look at this scenario, there was a large break and liquidity sweep, then there was a break, and then there was a strong low according to a weekly time frame. The market tapped here and we saw one main move. As soon as the market tapped in this weekly area, we saw bullish move, and then there was a weekly break. And as soon as there was a weekly break, you can see buy trades while targeting the high. As you learned earlier in the previous sessions, a strong low and a weak high. As soon as the market pulls back, we then target the next weak high or weak low in alignment with the overall trend. For almost 42 days, the market moved in the same direction. After a structural break and a pullback, we saw an expansion. This expansion lasted for approximately 21 days, indicating strong momentum in the direction of the trend. And here you can see that the market has started to go up. You can observe that the market has started to move upward. Overall, it has been trending in the bullish direction for approximately 56 days. Alright, now let's move to the end and check out one or two more examples just to wrap things up. So the rest is on you. Test the data yourself, go back, observe and apply. I am leaving it to you now. And that's how you find your weekly bias. I won't make this video any longer. I will keep things short and focused so everything stays to the point. You need to train your own eyes. That's the whole point. Make sure to practice every session. That's why I leave a gap between sessions. So let's move forward to the end. If we look at the most recent example, there was a weekly break here. Over the bias was bullish. As soon as there was a weekly break here, we will continue to open 5-digit trades according to the system, according to the plan, according to the entry model. We have this low and this high, and our entry is traveling in this range. It is going to up and down in this range. Now, of course, the market will not go in one direction. It will pull back, and now it is in this phase. And it is possible that after the pullback, the market will start moving in the next direction. And again, it will put a maybe new all-time high. Again, if we look at the daily time frames, we can repeat the same thing. We can find our strong lows and strong highs. The low that sweeps and breaks is a strong low. Again, here we can see that any low that sweeps and breaks is a strong low. Any high that sweeps and breaks is a strong high. If you want to see strong highs or strong lows, you can look at the candlestick chart instead of the line chart that you can identify better. Okay, so this was a sweep, this was a break. Now we have a strong high. Once this strong high was formed, the market started to drop. And for the last 6 days, price has been moving down consistently, showing clear bearish momentum after that strong high confirmation. Let's measure the move from the point of the structure break. Market has moved approximately 2000 plus pips in the same direction. Well, on the daily time frame, you are only seeing a piece of puzzle, the short-term picture. But when you zoom out to the weekly time frame using the line chart, everything changes. That's where you define your higher time frame bias. Your 1 month to 6 month projection. The direction becomes clear, cleaner, and more strategic. This is how professional traders plan their swing positions. And yep, peace out. Catch the trend, don't chase it. And sorry because I was not active in the market for the last few months, but I will be back soon, and this time I'm coming in full force. We are going to smash the game together. I will be sharing every move, every setup with you all. Life is a little bit busy right now, but I am still here. Inshallah, everything will get better soon. Peace out.